Hello everybody, William Jordan here from the Moneymaker channel. So I know this video has been long overdue and I should have actually put out a video like this when the topic was still hot and trending, but the reason I'm making this at 3 o'clock in the morning for your guys' entertainment and educational purposes is simply because a couple of weeks ago I saw some of my friends that asked me about the whole Gamestop, Robinhood, Wallstreetbets fiasco that went down in the beginning of the year. And since I haven't seen them for quite some time, it just brought these things back to memory since I was following the topic very carefully for a really long period of time. So yeah, I decided to make this video today. Sorry for it being late. This isn't the easiest subject to talk about, especially that most of the people surrounding me and people I talk to are not very financially inclined. Well, yes, they are, but they're not very banker, analyst, hedge fund friendly people. And me studying to be a financial analyst, stock trader, etc. It's difficult for me to talk about these things because there's always somebody that's going to be against you. And the analysis on this was quite difficult and also very evenly dispersed, let's put it that way. It could have gone any way. And apart from that, it was probably one of the more risky positions you could have found yourself in, whether you were shorting the stock or buying into GameStop at the point. So I know the whole analysis thing that went on into the original Reddit poster's mind on why he thinks GameStop would be going up. Sound analysis and many things were there to show that the stock should be going up. The books were good, so I'm not going to talk about the analysis. I'm going to talk more about everything that went down in January and the people against the hedge funds kind of way. So basically a couple of weeks ago, beginning of the year, end of last year basically, some Redditors found out that a certain hedge fund was shorting GameStop stock. GameStop stock. Puh. And these Redditors decided that it would be a good idea to push up the price of GameStop, and they put it out on the subreddit forum Wallstreetbets. Now the hedge funds of course said that the Redditors were manipulating the market. The Redditors said that the hedge funds were manipulating the markets. Robinhood stopped the trading altogether and everyone was losing money and everyone started suing one another from all sides of the aisle. So because of COVID and during the whole pandemic, more and more people started looking towards stock investing and trading to earn some extra income. And many of the people were hanging out on the subreddit Wallstreetbets, discussing information and exchanging stock tips. Many people were also trading on the Robinhood app, which unlike most brokerages allows a lot of people to trade on margin and access options trading, all being part of their mission to democratize finance for everybody out there. Now on Reddit there are also a lot of gamers, some of which have taken an interest in the retail game shop Gamestop. Even though GameStop still has many stores in the US and even internationally, there is reason to believe that GameStop will face certain difficulties in the near future, since they face competition from downloadable content and its ease of access, as well as the closing of stores and malls these last couple of years. GameStop also didn't expect to turn a profit until the year 2023, and all of this combined has some people speculating that GameStop will go down the same path as Blockbuster did a couple of years ago. Now there are certain people who don't agree with this, saying that GameStop still has a bright future ahead of them, and certain investors also announced that they have taken an interest in GameStop, which of course made other investors notice the move. Then a couple of months ago, some of the Redditors noticed that certain institutional investors had taken up a short position in GameStop. I'll be posting a video in the near future about short and long positions. Just wait for it. Sorry, I'm restarting this channel from scratch, so hang in there. It will get out there. These Redditors decided to act on this move and thought that if they went out and bought shares in GameStop, this would drive up the price and squeeze out the short positions, which in turn would drive up the prices even more and they could turn a profit on this. Now when this happened, the subreddit Wallstreetbets had around 5 million members. And if a substantial amount of those members bought the stock, they could actually move the market in their favor. And this is exactly what happened. At the beginning of the year, GameStop was trading below $20 a share. But less than a month later, because of this move from the Redditors, GameStop was trading at $350. Redditors did this with other stocks as well, and many people, including some important personalities out there, were cheering on these Redditors. This all, of course, gave the image of the underdog fighting back. Redditors say that they are just doing what any normal person is doing when buying stocks, betting on stock prices to rise. So even though the investment community isn't happy with this, many just see it as normal people trying to do what the wealthy have been doing for years, making money from a company's growth. Now, of course, big hedge funds in these short positions are mad at this. Now, just because hedge funds are usually seen as the bad guys from many people's point of view, keep in mind that credit unions, pension funds, and many others will suffer from this move on GameStop and what the Redditors are doing. And the echoes emanating from these actions would be heard throughout all of the financial markets. You have to remember that trading is a zero-sum game, and that for every win there is obligatory a loss somewhere out there. And that the people getting hurt by this move are everybody that took a short position in GameStop. Shorting basically means that you're borrowing a stock, hoping that the price will drop, and buying it back at a lower price later on, allowing you to pocket the difference. And this is actually a lot riskier than just plain out buying a stock. If you buy a stock and it drops down to $0 per share, the company goes bankrupt, you basically only lose the amount of money you invested into it. Whereas when you're shorting a stock, stocks have an unlimited upside potential. Basically means that you could lose many times more than what you invested initially when you have to buy the stock back at a later period in time. There is no limit on how much you can lose when you short a stock. If you buy a stock, for instance, at $20 a share and the stock price drops to zero, you only lose those $20 you invested into the stock. But now imagine that you short a stock at $20 a share. You hope that the price drops. But all of a sudden, the stock goes haywire like we saw with GameStop. And for instance, the stock goes to $200 a share. And now you have to buy back the stock. You're basically losing 10 times more by buying back the stock at a later period in time because you shorted it than your initial investment. This is exactly what happened with the traders on Reddit versus the institutional investors who have shorted GameStop. Redditors wanted to build up the price of GameStop, making themselves money in return, and if they could destroy a hedge fund at the same time, so much the better, right? Now, the hedge funds that closed out their positions on GameStop meant that they had to buy back all of their short positions at a much higher price. Some of these hedge funds may have gone bankrupt if they didn't get cash infusions from other hedge funds out there. Now, in the middle of all of this commotion with GameStop prices fluctuating wildly, etc., Robinhood stopped all trading on GameStop at the end of January. Some reports show that over 50% of all people using the Robinhood app at the time had some sort of position in GameStop. Certain people reported that after Robinhood stopped trading on GameStop, they allowed some to exit their positions but not buy back in. And others reported that Robinhood closed their positions or selling GameStop. This all caused major outbursts from people trying to buy the GameStop stock. Now, like I said in the beginning, the analysis behind it, the reason the hedge funds shorted the stock and the reason why a lot of people bought into it, the analysis on different levels I could understand. Some of it was pure speculation, some of it was just to screw over the hedge funds. But I'm more focused on what happened in January. Is any of this legal? And like my friends told me, that's not normal what happened later on with Robinhood stopping all trading on GameStop. So the question is any of this legal? The hedge fund with massive short positions, the Redditors boosting up the price, or Robinhood stopping trading in, etc., is any of this actually legal? And if so, what is legal, what is illegal? Now let's talk about market manipulation. Manipulating stock prices is actually illegal, okay? It's just the way it is, and it has been illegal for ages already, for decades. It distorts the prices of securities and damages the market's integrity. It also distorts people's beliefs on prices, making them believe the market is rigged. Think back what happened in the markets during the years 2007 and 2008. Many people lost their houses and their life savings, while many financial institutions were bailed out by the government. The distortion of beliefs back then were somewhat justified, actually. Since then, certain laws were put in place in order to combat fraud in the financial markets. However, market manipulation has been illegal for a very long time already, and since the financial markets trading happened in the very beginning of time, people have been looking for ways to combat fraud in the financial markets. Now, under the CAA, whether there is market manipulation is actually decided by a test in 4 parts. Part 1, the accused had the ability to influence market prices. Did they or did they not have the ability to influence market prices? Part 2, the accused specifically intended to create or affect a price or a price trend that does not reflect legitimate forces of supply and demand. Part 3, the artificial price existed. And Part 4, the accused caused the artificial price. All of that decides whether there is market manipulation involved. So let's get back to the Redditors. Did the Redditors have the ability to influence market prices? I think from what I said previously about the amount of Redditors on there and the amount of people buying into it, I can clearly state that yes, they did have the ability to influence market prices. They succeeded in dramatically raising the price of a certain stock, which can be seen as market manipulation. Now, did they intend to inflate the price of Gamestop in a way that did not reflect the legitimate forces of supply and demand? That is a bit more of a gray area according to me. Now, a classic market manipulation scheme is the pump and dump. Think Wolf of Wall Street, if you will. Fraudsters talk up the stocks that are basically worthless, enticing people to buy, which drive up the price, where later the fraudsters would sell their own shares, making a huge profit and causing the price to drop once again, which in turn causes many people to be left holding on to their bad positions and losing a lot of money in the process. Forums and discussion boards are go-to platforms to put this scheme into practice, but what happened to GameStop doesn't quite fill the bill for the pump and dump scheme, which is illegal. Now, a couple of months ago, a post appeared on Reddit stating bankrupting institutional investors for dummies featuring GameStop, which one could argue is proof that the people wanted to manipulate the GameStop stock in order to hurt institutional investors. On the other hand, one could also argue that there isn't much evidence that the Redditors on Wallstreetbets were lying about the GameStop stock or creating false rumors in order to pump up the price. Also, many would say that some of these Redditors were really thoughtful of their positions. They put a lot of analysis into it, and they weren't necessarily trying to screw other people over. Now, even with what the title of this post said, the post itself shows many reasons why GameStop would be a good investment. Some traders shared legitimate information about GameStop, and their arguments may be seen as convincing as to why GameStop should be going up in price. So, taking both sides of the equation, one or the other or both of these arguments can actually be right, especially when you're dealing with millions of people out there. Now, this is where intent actually comes in. The SEC argues that even legitimate transactions are manipulative if the trader intends to manipulate the market. So basically, a legitimate transaction can be turned into an illegal practice such as market manipulation, and that's all dependent on the intent of the trader. So on the one hand, we have people just trying to screw over the hedge funds, which can be seen as market manipulation. And on the other hand, we have people thinking that GameStop is actually a good company and it's worth investing in. Also, if you engage in something to set a price, you might be engaged in something that violates the Antitrust Act. So that's why I said that second point is kind of a gray area. You could argue it both ways, and I think in a lot of cases, both of these ways are legit. Some people were intending to screw over the hedge funds, some were not. And everybody, if they are involved in something that's intended to screw somebody else over, is considered market manipulation in certain ways. So who's manipulating who? There was much outrage over the situation because people felt like the markets were nothing but a fake game anyway, since everyone that participates in the markets changes the prices just by their mere participation in them. The markets are regulated. Certain laws are put in place to stop traders from crossing certain lines. Now, the Redditors state that the hedge funds can do whatever they want in the markets, crossing all the lines they wish, and that retail investors don't get to do that, and that they are getting punished because they are trying to use the same tools as the hedge funds have been using for years. Now remember that short selling in itself isn't an illegal practice. It has existed for centuries, and short squeezes themselves are not an illegal practice either. This brings us to the idea that many people have as to there being a collusion between hedge funds and Robinhood. Many people think that Robinhood stopped trading on Gamestop in January because of the business activities they may have had with hedge funds in some way or the other. It is more probable, however, that the actions Robinhood undertook were related to business concerns they may have had rather than a conspiracy to defraud their customers. Now, this may or may not be true, but remember that most people using the Robinhood app are trading on margin. They don't necessarily purchase the stocks, rather they get the rights to purchase the stocks from Robinhood. Because of this, a lot of these complicated transactions do not clear for many days. Robinhood was probably worried about its own liquidity given the amount of volatility going on in GameStop, as well as the ability of its customers trading on margin to fulfill the orders they were putting in place. Now, just because Robinhood had legitimate business reasons for limiting the trading, you can also understand why the users of the app were furious that Robinhood prevented them from buying more GameStop shares, all while allowing people to sell the shares they already owned. This, of course, resulted in the price of GameStop once again plummeting. Also, there were some isolated reports of users stating that Robinhood sold the stock they had purchased in GameStop. This is probably more due to those users trading on margin, and they were probably facing a margin call. Once again, I will be talking about margin calls in a future video. This is where we enter the fine print and the terms and conditions that everybody has to sign when they sign up for a Robinhood account. Does nobody read the terms and conditions? Okay, I have to admit, most of the time I don't read the terms and conditions either. But when there's money involved, when I put money into an account, there's some of my own investments involved, I make sure to read through and study those terms and conditions multiple times before signing up for the account. Section 13 of the user agreement states that Robinhood is allowed to take into account market volatility. Market volatility, market orders, limit orders, and queued orders of Section 13, you sign that I understand that during periods of high volume, illiquidity, fast movement or volatility in the marketplace, the execution price received may differ from the quote provided on entry of an order, and I may receive partial executions of an order at different prices. And then further on in Section 16 of the user agreement, restrictions on trading, I understand that Robinhood may, in its discretion, prohibit or restrict the trading of securities or substitution of securities in any of my accounts. Further on, I understand that Robinhood may at any time, at its sole discretion and without prior notice to me, prohibit or restrict my access to the use of the app or website or related services and my ability to trade, refuse to accept any of my transactions, refuse to execute any of my transactions, or terminate my account. Now, people are rightfully upset because of Robinhood stopping all trading on GameStop stock and whether it was a good business decision or not. For whatever the reason, people have hated the way they've been treated by Robinhood, whether it was a good business decision or not, whether it was because of collusion or not, whatever the reason, people hated it. Now remember, just because something is legal doesn't mean you have to like it. So what are my thoughts on all this? I did not go into a long or short position on GameStop. The unevenness and volatility behind the GameStop share price is just a bit too much and a bit difficult for me to analyze. As of me making this video, it's trading at just over $200 a share, and just a couple of days ago it was much lower at $49 a share, and then beginning of February, end of January, it was a but much higher price. So there's too much volatility involved, and it makes analyzing the stock price really difficult. Do I think it's a fair value at where it's trading at now? No, I don't. I think it should be much lower and that the prices are kept artificially high. But my thoughts on what I should have done? Well, on the one hand, I could have gotten the same analysis as the hedge funds and thought that, like Blockbuster, GameStop would go the way of the dodo, and then I would have shorted the stock, which in turn would have made me lose a lot of money at some point, especially at the end of January, beginning of February. Or I could have followed the crowd on Wallstreetbets and bought GameStop shares and made some money, or later maybe lost a lot of money when the stock plummeted again. All because I followed the crowd psychology. More on crowd psychology in a future video. Oh man, I've got so many videos to prepare for you guys. The financial markets are not integrated fully. We strive to get better integration. But then something like this comes along where everything you studied, everything you planned, and all the brain power you put into analyzing a stock goes out the window. Because people are getting mad at one another, people trying to screw over the other party, and in the end, this also can make the markets less integrated and cause many to lose faith in the financial markets. One thing I can say, institutional or retail investors out there, stick to your stops. Stop losses are key to losing less money than you would have lost in the beginning. Stick to your stops, and this will take away a lot of the pain. I hope you guys enjoyed this video. Sorry for it being a bit late. Remember, if you like my content, leave me a thumbs up. I would appreciate it. This was William Jordan from the Moneymaker channel. See you guys in the next video.